Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli on this big Wednesday of earnings season, but a day when the market really didn't do that much. Of course, we had Wall Street snapping its 8-day rally. We're looking ahead to the Jackson Hole Symposium. And if we look at where the CBO 200 is finishing the day's trade, pretty much unchanged. And the ASX 200 only up by 1 point on the close. It looks like, of course, we're still in match off 7,998. Doesn't seem to want to get to that 8,000 point level. It's very much flirting, if you like, with that. But what did help us out today amidst some of the earnings shockers and the weakness in the energy players was some gains coming through in the miners and the gold players as we see iron ore start to catch up a little bit of its recent, lackluster movement that we have been seeing in that commodity. So we are very much treading water, and as I mentioned, busy with some really big earnings. Don't forget you can catch all of these under our reporting season rail on ausbiz.com.au. Today we spoke to the likes of the IAG CFO, the Domino's CEO, Scentre Group CEO. We also spoke to PEXA, Qualitas, Ventia. Lots of earnings out there and lots of CEO and CFO interviews for you to catch up on our website. And more broadly, away from Aussie earnings season, the FOMC in focus with those minutes expected to come through tonight ahead of the Jackson Hole Symposium kicking off in Wyoming on Thursday, where we are expecting to see that rate cut trajectory flagged somewhat. As one guest told me today, it's really not even a question of the cuts, it's whether or not they're going to go 25 or 50 basis points. Let's have a look at the sectors of the day on what was a flat day. I mentioned the miners coming back with iron ore recouping some of its losses. Fortescue there up by more than 4%. Gold players also had a really good day. Of course, we're looking ahead to these expected interest rate cuts. And the gold stocks as a whole on the Aussie market actually at or near a 4-year high today. Tech also being helped out, and that was really by WiseTech Global. I read that the CEO of WiseTech Global, let me just double check my $1.7 billion Richard White made today. So I'd like to say same, but no, I think I probably made $1.7, but $1.7 billion to his wealth. The 30-year-old company stunning the market with forecasts for revenue growth of up to 30% this year. And energy stocks heading the other way today as we see crude oil falter. Santos also coming through with its numbers today. It's our first half numbers, sending its shares down 4.4%. So let's get to some of those. I mentioned WiseTech reporting a big jump in profit. Shares of the software provider hitting a record, $111.21. Santos slumping after reporting a big drop in first half underlying profit with LNG prices softening. Domino's also coming under pressure. Now, it posted a 2% drop in full year profit. As I mentioned, I spoke to the CEO. They really need to see their France and Japan businesses turn around. A crucial moment, he was saying, for those businesses. IAG as well, we spoke to the CFO, and Scentre Group, they're actually gaining about 1/10%. It did see a big jump in half-year profit. We also had a really interesting talk about, of course, the Westfield Bondi Junction attack and some words there from the CEO after that horrible event in April. But let's get to things that are less horrible. Mark Gardner from MPC Markets joins me now. Not going anywhere today, but what a busy day. We made it.
Well, almost furiously treading water, I suppose. Obviously, that WiseTech result, I mean, we've been sort of talking about this over the last couple of weeks whenever we've come in over earnings. Market darling, check. Positive outlook, check. Great result, check. And I mean, I didn't think it'd open up 17%, but...
Is it expensive at 111?
WiseTech particularly is one of those ones where maybe, but for how long? I mean, they deliver. They've been delivering forever.
Yeah.
So I mean, we've trimmed to rebalance in a couple of these stocks for clients who brought them on board, where we just sort of provide risk management plans for them because they've obviously done well. They've become enormous parts of their portfolio, but it's no reason to necessarily just sell them to get back in line. So we've sort of trimmed very small amounts on the way up. Promedicus, I think, was probably, the price action's been a little bit poor, around 150 here, but WiseTech, look, it's, unless someone comes out it's the barrier to entry in what they've got is so high.
Yeah.
They've got such a great moat. They've delivered for such a long time. I mean, I think they probably are a little bit expensive. Probably settles back around 105 or something like that. But I mean, you're just going to run into the same problem probably in February next year.
Yeah.
I would say, because they're it's a fairly essential service what they're providing. It's not really that cyclical. If anything, people would be using their software to try and save themselves money and gain efficiencies. So in a way, it's almost recession-proof, I suppose. But yeah, certainly couldn't put new money in up here, that's for sure. If you were going to do that, you should have done it probably a couple of weeks ago.
Yeah, imagine making 1.7 billion in a day. I'd be not only going to the Maldives, I'd be buying the Maldives.
I think it'd just be. I mean, it's a 30-year build for this company.
Yeah.
You know,
It's not an
I think
overnight
it'd be far prouder of where the company stands than the 1.7 billion. I reckon.
True. All right, let's talk about Mass Group Holdings. It also had a very good day, 7.5% gain.
Yeah, and it opened strangely weak. There was a little bit of selling in the open. We were very confused by it, and then it's essentially just ground higher. I would expect broker upgrades on this one. The results were really good. They've maintained around about a 30% plus compounded annualised growth rate, and their outlook was pretty good. It was probably we actually, some of our more aggressive clients topped up this morning on the open and have done pretty well. So yeah, but there was a weird open. You sort of can't always necessarily take the lead from the open. Ventia was another one this morning that was quite confusing. They disappointed, opened up a little bit higher, but as people read through the report over the course of the day, that share price has been hit. So the the open can be sometimes a little bit misleading, but yeah, just another really good result for Mars Group, and their construction business has grown by over 50% or something. So there's more scope to grow. It's not a huge company, so yeah, that one's sort of in our small caps portfolio, and I would say that I think average consensus price target's around 490, so we're still 10% below that. I think there'll be upgrades tomorrow. I think you probably could see that a continued rally in that stock over the next couple of days.
Yeah, Ventia I thought was interesting though, because it did hit a record high yesterday, so maybe some of that coming off as well.
Yeah, I think the stocks that are at those record highs, I thought it was a little bit of a risk, because it's it's a essential services sort of company.
Yeah.
It's not a WiseTech where you can get infinite growth. So it was a bit odd, that open. I don't know where the buying came from there, because the result missed expectations on most of the metrics. Not by much, but by enough. I think it's probably. I don't think it'll necessarily get downgraded, but I think it's probably found its top for now overall. But I do like the company. But it is probably just a little bit expensive up here at the moment.
All right, let's talk about the iron ore bounce, because Fortescue BHP coming back and looking like some more stimulus rumours out of China.
Yeah, so they're looking at expanding the amount of bonds they can issue, which has been a pretty hard cap, and that was a rumour that came out of Reuters a couple of days ago. And they're also looking at to stimulate the consumer vouchers. So we've been sort of led down the garden path with stimulus with China, and it's been pretty disappointing for the last year and a half. But those sort of fresh rumours coming out now, I think that'll start to pick things up a little bit. Iron ore, I mean, it's bounced, but it's not. I mean, it's probably only up 5 or 6% in the last 3 days, coming off a pretty horrible low.
Yeah.
But I think where the buying's come in Fortescue, I was on the call yesterday with Mark Morland, and we're at a PE of somewhere around the 3 mark. Rio's realised iron ore prices are only down 1% on the half year.
Yeah.
So these guys are going to be paying enormous dividends. So I think that that just needed that little bit of a bounce. People are starting to realise that it's overly cheap, and earnings are next week, and a dividends in 2 weeks to 3 weeks. So
given it was close to 30, so now 18. Yeah.
Yeah, and realistically, they're even with the 20% downgrade that analysts are expecting of the dividend, at these prices still, it's nearly a 10% fully franked annualised dividend. So you're not really getting that anywhere else.
All right, look, let's talk about the FOMC minutes. I mean, a lot of it's flagged, but it's a big week. Jackson Hole very much in focus.
Yeah, I think that this tonight will be largely ignored because Jackson Hole's coming up. I think the market's probably, there's a bit of optimism about the economy, and then optimism about supersized rate cuts, and those two things never have actually come together at the same time. So I think the market's kind of lining itself up. I'm sort of, that it drifted off last night. I would expect that the risk is certainly to the downside with that one, because I don't think Powell's going to, I mean, we've seen in the data that's come out recently that the figures have actually improved a little bit. So I don't think Powell's going to be talking up and jawboning mega-sized rate cuts. I think that's more what the market wants. But I think 25 is probably the sensible move and the maximum move they should do. I don't think they should start with the 50. There's no that unwind of the carry trade was a moment in the market. Outside of actual financial markets, it doesn't mean anything to the economy realistically. Certainly not in the short term. So there's no need for 50 basis point cuts when we've still, I think we're on our 46th straight month of employment gains in the US. We haven't had a down payrolls number since December 2020.
Wow.
Still got an unemployment at 4.3. That's not emergency rate cut territory. So I think the market could potentially be a little bit disappointed. Obviously, Nvidia's very large part of the sentiment, which releases earnings next Thursday, and obviously very late in the season. But Huawei's come out with competition. I think there's been a fair bit of disappointment on the revenue coming from AI. Be interesting to see if that spend is continued. And obviously Nvidia's back near the 130 mark now at the moment. So I think that'll be really key as a one-off earnings result, because it'll set the tone for that entire AI thematic, which is a very large part of the premium that's sitting in that Nasdaq at the moment.
Yeah.
So if the wind starts to come out of the sails of that, that's probably at least a 5% premium that can be easily taken out of the market without any sort of question. So there's a few interesting things coming up overall. But yeah, it's been thankfully a quiet week in terms of economic numbers, so we can get across these earnings.
I thought you were about to say it's been a quiet week, but
Well,
yes,
tomorrow,
in economic
tomorrow's
data.
just as big, I think, with earnings as well.
Yeah,
so
a
a
lot
couple of the commodities
happening.
guys, I think Whitehaven, Northern Star, Telix will be really good tomorrow, I think.
Yeah.
I mean, it probably ticks all the boxes as well. Bit of a market darling. It's great at the outlook. They've got massive growth drivers at the moment. I would be expecting a pretty good result and a decent update from those guys tomorrow potentially. So
Yeah.
a lot to look out for.
Indeed. All right, Mark, always good to get your
Cheers.
insights. Thanks so much, Mark Gardner there from MPC Markets with us, talking all things reporting season. We mentioned WiseTech Global having a great day. It was the stock of the day. Henry Jennings from Marcus Today and Andrew Weilant from DP Wealth Advisory joining our Andrew on the call.
2 weeks ago, you could have bought this stock for $83. Now you're paying $110 plus. So I hate to say the ship has sailed, but it certainly has left the port. And I'm not sure I'd be chasing it up here. I'm sure that we're going to get some neutral-ish comments from brokers tomorrow. So maybe we'll see a little bit of backing. But it just shows the power of having a shopping list and the power of looking through the volatility.
And I'm looking at the current PE, it's currently trading at 94 times earnings. And we know that the market is trading at around 18 times earnings. So we then fall back onto Andrew's favourite, the PEG, whereby we're trying to find companies whose earnings are growing quicker than what their PE is. And forecast earnings for WiseTech prior to today was around 37-38%. So it's super expensive, super expensive, but they're delivering, and no pun intended considering they're a logistics company.
So I'd be very surprised if WiseTech is not the top of the leaders board. Let's get to the leaders and laggards, and there it is, up 18.4%, $111.21. Charter Hall, Helios, Brambles, Linus, all having great session today. To the downside, we saw weakness coming through from Ventia Services. We did talk to the CEO there. We're going to bring that to you tomorrow because today was very busy. Down 7.4%. Santos down 4.4%. AUB Goodman Group off by almost 4%. And in the small end of town, Hum there up by 33%. Cedar Woods Property, Andrew just spoke to them, up by 9.4%. And in the small end of town, some of the losers included Rimfire Pacific, Integrated Research, Trajan, Articore and Berkeley Energia. All right, let's have a look at what we're expecting tonight. We mentioned the FOMC minutes, and as Mark mentioned, very light on in terms of economic data. And that is actually good news when we've got so many earnings to get through. But in terms of what we're expecting tomorrow, we do have the Judo Bank PMI for August, and then a raft of earnings, as we mentioned, including Auckland International Airport, ARN Media, G8 Education. We're going to be speaking to them. Insignia Financial, Medibank, we'll be speaking to them as well. Sonic Healthcare, Super Retail Group, and Telix Pharmaceuticals. A lot out there, a lot, of course, across a raft of different industries as well. So a good picture. And a really great chat that I had with Michael Skinner from Blackwater. You can, of course, find it on our website as well, saying, you know, beware the back half of the earnings season. Have we had some really good results? Are we going to get some bad ones that might upset the apple cart over the next week or so? But checking where the market has finished today, and it was a pretty flat day as we did tread water ahead of the Jackson Hole Symposium and on the back of no real economic data. The ASX 200 only managing a gain of 1 point today, 7,998. And when you look at some of the big pockets of weakness, particularly in the energy space and the REITs and the banks, I think that we can thank that flat momentum on the fact that WiseTech rallied so hard, as did the iron ore players and also the gold players. All right, we'll be back from 9:45 a.m. Eastern tomorrow for another busy earnings day. We'll see you then.